Warren Buffett is an American investor, a business mogul, and philanthropist. He's widely regarded as one of the greatest investors of all time. He was born in 1930 in Omaha, Nebraska, and began his investing career at an early age. Buffett started his first investment partnership in 1956 with $105,000, and by the mid-60s, he had taken control of textile manufacturer Berkshire Hathaway, which he transformed into a holding company for his various investments. Buffett is known for his value investing approach, which involves analyzing companies to determine their intrinsic value and buying stocks when they are undervalued. He famously focuses on a company's long-term prospects rather than the short-term gains. In this video, we are going to analyze some of the most important Warren Buffett pieces of investing advice, specifically around dividend stocks and dividend investing. And we are going to go over how we can apply these values to our own investing strategies. One of the most important pieces of investing advice Warren Buffett ever said was to look for companies with a long history of consistent dividends. According to Buffett, our favorite holding period is forever. He advises investors to look for companies that have a long history of paying dividends and increasing them over time. Now, this shows that the company has a stable business model and is committed to sharing profits with the shareholders. Now, like Warren Buffett said, the buy and hold forever strategy is a very, very important thing to understand. It's an investment approach where an investor buys a stock and wants to hold on to it indefinitely, regardless of short-term market fluctuations or news events. The idea is to invest in high-quality companies that have strong fundamentals, good management, and a competitive advantage, and to hold on to those stocks for the long term, allowing the power of compounding to work over time. Now, the buy and hold forever strategy is easier said than done, especially for younger investors that have been involved in the markets over the past few years. I can probably speak for all of us where there's been a lot of times where it was tempting to sell everything and move on, but the buy and hold forever strategy is one of the most important pieces of advice for a reason, and that's because it works. Another very important Warren Buffett piece of advice when it comes to dividend investing is to focus on quality over quantity. Buffett has always emphasized the importance of investing into high-quality companies with strong fundamentals. He advises investors to look for companies that have a competitive advantage, a strong balance sheet, and a sustainable business model. In his words, it's far better to buy a wonderful company at a fair price than a fair company at a wonderful price. This is another amazing piece of advice that is very tough for newer investors. When you first get involved in the stock market, it's going to be tempting to buy into stocks that are on sale, stocks that might seem very cheap, and there might be a reason why the market is pricing them at this price. In the grand scheme of things, in the long term, you would be much better off buying a really high quality asset at a decent price than buying a long-term declining asset at a dirt cheap price. This is an amazing piece of advice that I definitely could have utilized in my early days of dividend investing. The final really good piece of dividend advice that Warren Buffett has given us is to not be swayed by high dividend yields. While a high dividend yield may be attractive, it's important to remember that it's not the only factor to consider. Companies that offer high dividend yields may not be sustainable in the long term. And it's important to consider that these companies with rather high dividend yields may have to cut their dividends if they run into financial trouble. Buffett advises investors to focus on a company's overall financial health and growth prospects rather than just its dividend yield. Newer dividend stock investors are normally easily swindled into very high yielding stocks and or ETFs because of the idea of generating that juicy dividend on a monthly or a quarterly basis. But for those investors that are willing to do a little bit of homework and open up the charts and look at a metric over the last 5 years like total return, it's easy to see that even some of the highest yielding ETFs are underperforming the S&P 500. So when it comes to chasing higher dividend yielding stocks or ETFs, Warren Buffett explains it perfectly. It's not worth investing into something just because it has a high dividend yield. So those were just a few very important pieces of advice given from Warren Buffett himself. One of the great things about Warren Buffett's investing strategy is that a lot of it just comes down to common sense and playing it on the safer side of things. You can try to get rich quick in the stock market, or you can take the slow and steady route and get rich for certain. Warren Buffett has a lot of wisdom to offer when it comes to the slow and steady and the for sure way to build a long-term compounding machine of a portfolio. If you enjoyed this video and you want to see more videos like this in the future, make sure to please like this video and subscribe for more. Thanks as always, guys, and I'll see you in the next one. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.